Let's talk about the OTC markets, Emmanuel. Suddenly, you're saying you saw a lull in the OTC market this week. What contributed to this low activity?
Thank you for having me in the show. Prior to this period, market rallied owing to the announcement of Barclays Bank of the inclusion of the Nigerian bond market in its index. Due to the fact that by next week we'll be having the MPC meeting by 19th and 20th, and the National Bureau of Statistics announcing its monthly data on CPI figures on the 19th, and there'll be a bond auction also by Wednesday next week. Market is just showing a reservation to trading and a dealer's sentiment on the uncertainties and outcome of this event. The MPC have maintained rates for the 5th consecutive times this year, and it will not be surprising if they maintain rates as well in their communique on Tuesday. However, market have to wait and see exactly how the outcome would come by.
Right. Well, let's talk about the DMO auction. Of course, we're expecting that on the 21st of this month, about 50 billion naira on offer. What direction do you see the market going during this auction? And certainly, what are your expectations for yields?
We are not expecting any major surprises. However, one must take into cognizance the fact that there's likely going to be a little hike in inflation rate owing to the flood disaster that happened in the country. Although government is trying to moderate this effect by releasing about 9.7 billion to the food flood recovery plan and another 40,000 metric tons of grains from its strategic reserve. However, we have seen inflation moderate to a year-time low to 11.3%. But this is owing to two mutually inclusive effects, which have been effective monetary policy tool and a slow in demand and growth. We do not see yields coming out at any surprising rate. Our expectation is that yields will still trend within present market secondary levels, which is between 12.85 to possibly between 13.1%.
Well, let's turn our attention to another issue in Nigeria's federal government bond markets. Now, the Ministry of Finance, the Minister of Finance has shown interest in raising about $1 billion in euro bonds. Now, what impact do you think this will have on the domestic market, certainly which is crowded?
Well, thank you for that question. Well, that's a way to go. The market needs to see some ease in the amount of volumes that has been issued. However, we must take into cognizance that the domestic market is being influenced by a number of other factors, which is the inclusion of the Nigerian bond into both the JP Morgan bond index and proposed Barclays index in March. That would usher in some hour of demand from offshore investors. What we could see in this sense is that market have to be cognizance of the fact that we have over 639 billion maturing in 5.5% February 2013 maturity. Right. What the DMO would do concerning this very huge volume, we do not know for now, whether they will propose a switch or not, but we think it's a huge volume, and market is keen to see exactly whether this bond would mature into its system or not. However, the DMO have demonstrated a huge capacity to meet its obligations. We will not be surprised if they actually meet this obligation. The Nigerian Euro bond offer of 1 billion possibly next year. It's a good one for the country because it will ease off the crowding effect of bank balance sheets and the pension funds balance sheets as well. But if bond yields keep coming out at some very, very good levels, market will still don't mind the number of volumes that will be issued by the Debt Management Office.
Well, very quickly, Emmanuel, give me your take. You talked a little bit about your expectations for the MPC meeting, of course, coming up next week. Certainly, there's a lot of pressure on the CBN to ease. What are your expectations for inflation also? I mean, a lot of people are saying we're going to see that number going up, of course, as food inflation rises.
Well, thank you. Talking about inflation as it were, there have been huge success recorded by the Monetary Authority in the moderation of inflation. That has been demonstrated exclusively by the success of the monetary policy being implemented, as I said earlier on, by a slowdown in demand pressure on domestic food items. Yes, we are going to see inflation ease up slightly, but it's not going to impact so much on the market.